Hello, this is Manesh Patel with IMTF Trade. Today I'm going to show you exactly how you can make a 3-to-1 reward risk ratio. A lot of people think you can't do it, but it's a simple 1, 2, 3 step process. And I'm going to show you exactly how we did this on Netflix. I'm going to show you the option trade too and everything from the technical charts. So here we go. First thing I do, I go to alerttrades.com. This is our website that basically we own, that we created with our own seasonal software. It's free. You don't have to do anything. You don't have to pay anything. There's no catches, nothing at all. Go onto this website, register for free, and it'll pull up the screen right here. First thing you do is you put in your symbol or your instrument. We support every stock or currencies and futures around the world. So here's Netflix here. Oops. Let's just do Netflix. Okay. So here's Netflix. So here you click on what you want to see. This is January 2019. Okay, which is exactly this month. If you look on here, it tells you it's an 85% probability of being bullish. Here's the key thing. It tells you it's going to make an average prediction move of 34.3%. That's a huge move. The drawdown of 4.8%, max profit of 38.4%. This is pretty big. Now, this could be big. This is big. And if you look at the every year, that's kind of like a huge number. Don't expect a 34% move, but all you know is it's going to be a big move that's critical. The most important thing is this SIV value here. It tells you 25%, 1/4 of the entire price action for Netflix occurs this month. That means it's a trending month. So now all you have to do is take this information at the beginning of the month, sit there and go to your technical charts and confirm it. So now I'm going to go to my technical charts. Since we're dealing with a monthly time frame, I'm going to look at a 60-minute chart. Here's a 60-minute chart. On our indicators here, we do a multiple time frame indicator. It basically looks at everything from 1 minute to 1 month. We have a green shaded area. The green shaded area tells us that we're bullish. The blue dots here tells us exactly where the breakout entry would be. So we basically put our breakout entry here, and notice the shaded area started occurring here and around January 2nd, which is the beginning of the month, which is a seasonal pattern. So we put our order here. This was my entry. These green dots are basically my initial stop, and then it turns into my trailing stop as we move forward. And you could see today that basically this is my reward risk. Here's Netflix today. You can see basically right now on a technical chart basis, if I bought the stock, I'll be over a 320% return on my reward risk, which is huge. Let me show you the option price. Here's an option price for Netflix. We sat there for demo purposes. We sat there, but this is a live trade, okay? And we always put in one contract here to show people you can make a lot of money off one contract and not get fool people with 10 or 100 and so forth. This is a vertical spread, okay? We did a vertical spread. Believe it or not, you could have done a call too. But with a vertical spread, and notice we won one thing. We went out to March. Now this is kind of extremely long for a vertical spread because the sweet spots are pretty much 60 days or 45 days or lower. And this is actually going out about 65, 60 days or so. We did it long term, but it's not a big deal. The max risk for this vertical, it's kind of hard to see the green right there. It's about $110. The good thing is, we're not risking the whole $110. We had our stop on the chart, so if you looked at everything from the Greeks, we were only going to risk about $40 of this $110, okay? And you can see the max profit up here is going to be roughly about close to $400 and so forth, okay? Today, you can look at this now. Remember, we were going to risk $40, and you could see already we're at profit of 190. Okay, so you could see that this is at a 3-to-1 reward risk ratio on the option chart too, and we still have a lot of time value built into this. So we could exit this trade today, or we just keep on taking this through earnings or up to earnings and whatever may be the case. But basically, we're gonna sit there and make right here, $5.20 every day, as long as we sit there and stay above this $315 value. So now all our profits are coming from time value, which is exactly what you want to see. Okay, a lot of people talk about getting an 8% return on vertical spreads. This is over a 300% return already right now based on the risk we're taking, and every day that this thing keeps on going up, we're locking in more and more profit, and we're making $5 every day on time. This is a perfect scenario. Now, why did I sit there and go out to March? Let me show you. Let's go back to the seasonal software. If we come back here, February, look in February, 87%, another 6.1% move. So it follows through, not from January to February, but also if you look here, it goes into March. March is a little weaker, but still, this basically is 76% probability of still being bullish. And you can see the last 3 years, it was bullish too. And this is one of the reasons why we went out to March, so forth, with that option contract. We did a vertical. Reason why is a lot of people can't afford the single price of the call option. If you could, then you could have done that too. But we basically did a vertical spread out in March, which basically would cover the huge move that you're going to get over here. But you could already see the January movements before earnings is already so huge that we're already at our 3-to-1 reward risk ratio, where we could take this trade off right now if we want, or we could keep on letting this ride all the way to earnings and still keep on making the money per day on time. This is how you should be trading. A simple 1, 2, 3 process. Unfortunately, a lot of traders now are complicating technical analysis, complicating trading, and have a very complex trading plan. You shouldn't at all. You should sit there and find high probability trades, pump them for your technical analysis, verify money management, and sit there and execute just like the machines do. If you do that, you can't sit there and get a 3-to-1 reward risk ratio higher. A lot of people think they can't, but the thing is, it's out there. You just gotta be patient, you gotta find it, and you gotta be systematic with the approach. Have a good day.